welcome back to a very special show, the Big Bank Cleanup, that we're doing right here on ET Now. And just before I go across to an expert panel that's joining me right here on a decision that the government has taken last evening, VG Kannan, Chief Executive of the IBA, TT Rammohan, Professor I.M. Ahmedabad, Anand Narayan, banking expert, and our consulting editor, Sunil Mehta. I think it's important to put in context what the Finance Minister did say. Sorry, Mr. Jaitley, the Union Council Minister, did say, Cabinet Minister did say on the local agencies not interfering with federal officials, and I think all his reference was being made to the Bank of Maharashtra case, and it's only fair that I take up a question on that, a couple of questions there, and then move on to the broad highlights of what we want to discuss. Maithili, in more ways than one, like he said, activism cannot threaten federalism. He's saying there was a reason why federal officials had to be questioned and probed by the federal government. State government should not do that. He's essentially referring to the Bank of Maharashtra arrests, and enough has been written and said about how the agencies acted in that case. Is this his way? Is this a way from the government to send out a dosage of confidence to a very battered banking industry?
I would think so, Supriya, except that it's come a bit too late in the day, because it's not just Bank of Maharashtra. Just recently there was a case of Andhra Bank, also Nasik branch, and I was looking at some of the reports, and let me just quote this to you. The Cuff Parade police station over there, the official says, he says, we had arrested the manager of Andhra Bank Nasik branch because such a huge amount was transferred without proper verification. We suspect his involvement as he sanctioned the transfer without inquiring about the documents. Now, the word uses suspect, not the mere basis of suspicion that proper verification was not done. Do you just go ahead and arrest? And this is what has happened. This is the reason why the Finance Minister feels the need to send out the signal that economic decision making must not be paralyzed, because clearly if you go around like this, not just the local police but the CBI, I think the entire approach has been completely ham-handed, as a result of which no bank official wants to take any decision whatsoever. Today bankers are struggling, banks are struggling to get people into their credit department. Why would you want to go to the credit department and have a risk somebody knocking at your door at midnight and being hauled out to the police station and promptly being put behind bars without even given an opportunity to present your case? So I think this is very necessary that Mr. Jaitley sent out this message, but unfortunately it might have come a bit too late. The damage has been done, and the government will have to go to enormous lengths to kind of assure bankers that they will not be victimized, and honest decision making, bona fide decision making will not be penalized like this. Unfortunately, I wish he had said this 6 months ago. Today it might be a little late, and I think all of us and the economy itself will pay a huge price for this excessive activism.
No, I kind of agree with you that credit system has choked completely, and this kind of confidence booster had to come a lot before. In fact, I think every banker in town is being looked at through this glass of suspicion as if they are the bad boys in many ways, more than one. But let me take this across to the topic under discussion, and both Finance Minister Piyush Goyal and of course the Cabinet Minister Arun Jaitley, his senior colleague, spoken on the state of India's banks. The government has rolled out a few things yesterday, AIF and the AMC and all of this. Mr. VG Kannan, and I request Mr. Kannan to start this debate. How will Project Sashakt resolve the NPA mess? Because a lot of people outside of this panel believes it is just simply old wine in new bottle. I mean, what is so new about this? There was a JLF, there was CDR, all of that did not accrue results, and now you have this.
There's a little bit of difference between what has been happening hitherto and what's happening under Sashakt. First is, of course, the first portion of the small ticket loans will be handled by the respective banks as hitherto. Most of the accounts of small value will be handled by them. But the second middle value will go through what is called the intercreditor agreement. Hitherto what happens is, whenever an account becomes stressed and there is a resolution package to be prepared, all the banks put together their heads and prepare the package, and there are always some pulls and pressures from here and there, and with the result what happens is the resolution package does not get fructified and is not implemented. Now going forward, what they say is an intercreditor agreement would facilitate the lead bank and or the bank which has got a large exposure to take the lead in preparing the entire resolution package, which if is cleared by 66% will automatically get approved. So, that way what happens is it will be a faster process rather than having a meeting, then going back to the lenders. This is the second level, and the third level is the critical one, which is being proposed, where AMC and a ARC type of structure will be formed. The difference between the existing ARC and this would be, in the existing ARC, most of the ARCs what they do is they take the existing assets with a haircut of 30% or 35%, and of the remaining amount only 15% is paid to the banks, and the remaining 85% is in the form of SR. With the result, as far as the banks are concerned, there is no major benefit, because they have to make provisions for the remaining 85% in terms of the existing RBI circular. So, that being the case, it does not make sense for them to sell it to anyone unless it is for 100% cash.
Okay, all right, just hold your thoughts, then I'll request the panel to be a little brief, because I've just got about 16 odd minutes on the show and I want to cover a lot of ground. Anant, I'll come to you before I go to Professor TTR Ramon, and you know, Anant, it's all very good to talk about an AMC and AIF and all of that. The question is, where will the money come from? I mean, the foreign pension funds and the sovereign funds are seemingly checking out. They are fleeing because, you know what, interest rates are rising in the US. They'd rather be there than be anywhere else in the world. And the question then is, who's willing to put in their bucks here? How are you going to finance this?
Yeah, absolutely, Supriya. Look, to be fair, I think, and a lot of good minds have come up with these ideas. There are some positives of the AIF AMC structure. One, it takes out all the big bad loans out of the bank books, or at least envisages that and puts it into one entity. Second, it concentrates all the decision making into one entity for resolution. And today, the disparate 10-15 banks trying to come through to a resolution is obviously very, very tough. Third, who knows, eventually it might even start a proper distressed debt trading platform. But it does leave a lot of questions unanswered. The first question, obvious question which comes to mind is, here is an AMC being set up by banks, presumably, to buy assets from the banks, to be funded, by the looks of it, largely by banks and domestic institutions. As you rightly point out, it's not very clear that foreign institutions will want to participate in something like this. Now, the best way of ensuring that this whole structure gets some semblance of credibility would be to have a large amount of non-government institutional funds coming in, non-bank, non-LIC kind of money coming in which case the purchases will happen at the right price, and therefore there'll be, all of this will be at a kosher level. If that was the case, if we are doing it the right way, then frankly, have we got enough capital in the books of the banks? Have we taken enough provisions in the books of the banks to do the transfer of these loans at the right price? If that had been done, frankly, ARCs would have worked as well. And that's the big elephant in the room, the fact that there is still not enough capital and provisions taken on public sector bank books to be more prudent and to be more conservative. I think that level is still missing. So lots of questions unanswered. There is potential for conflict of interest in the AMC and the AIF, which needs to be addressed. And the whole details about where the money comes from, etc., remains unanswered. If this takes a lot of time, frankly, we still have a clock ticking on NCLT, lots of cases piling up there. So what's the space?
No, I'm just going to go to that in a minute from now, but I'll take it across to Professor T.T. Ramon. And Professor Ramon, the reason why an IBC or NCLT and all of that was established was, and one of the reasons and one of the advantages of this is that, discretionary calls need to be made when you are resolving NPAs. How much haircut, what sort of asset price discovery and all of that. How is that going to happen in this AMC and AIF without questions being raised? One of the reasons why this was not happening by the JLR or the CDR and all such provisions was that bankers were not willing to take these calls. They did not have the legal ring fencing. They did not have the, legislative ring fencing. They were not willing to take calls. How will bankers now take these calls? Who's going to decide on asset price? Who's going to decide on haircuts? How much haircut to take? It's always going to be discretionary. There is no tick in the box that will give you an objective haircut, for instance.
Sorry, I've lost the.
Can Professor Rahman hear me?
Yeah, well, I lost the last part of your question, but I get the basic drift of what you're saying. Well, you know, I think the intention behind these proposals is laudable, because I think the intention is to find alternative mechanisms to the IBC. There is a realization in the banking system among bankers that the IBC should not become the default option when it comes to resolution, that whatever case is before you automatically goes to the IBC, because there the prospects of recovery in most of the sectors other than steel do not appear to be very bright. So if you want to effect better recoveries, then you need alternative mechanisms to the NCLT and the IBC. So that part is okay. But I think we need a lot more detail and a lot more clarity on what exactly the new proposals are all about. Now, for instance, the bank-led resolution process, where you're going to authorize a lead institution to propose a resolution plan, I think the key issues are two. The first is, what if the other banks don't agree, which is really a serious problem, you know. So the lead institution can jolly well come up with a resolution plan, but it's very difficult to get the other banks on board. And the second issue, which you correctly pointed out, is how are the banks going to be able to take the haircuts that are involved. So, and you know, how are they going to decide on the magnitude of haircuts, you know, given that large amounts of capital infusion will be required and so on. So I think it's not clear what the bank-led resolution process is all about. There is even more confusion regarding the AMC, because it's been presented as some kind of a different concept from the ARC, but the way it has been reported in the papers, the AMC seems to be an ARC by another name. So I'm not sure how it's going to help us, whereas the AMC which has been proposed in the case of stressed assets in the power sector, that's a very different idea, and let me spend a couple of minutes on that, because I think it's an idea which is worth exploring. So in the AMC which has been proposed for the power sector assets, the banks will move the assets to the AMC at the net asset value, which is the book value less the provisions. So there will not be a significant haircut. So this takes away the problem of large capital infusion. So you move into the AMC at the net asset value, and then you get some manager for the AMC, say somebody like NTPC, who will nurse the assets back to health,
Right.
and then you will find a buyer. So here, so the AMC which has been proposed for the power sector, so the objective is to get far better realizations than are possible under the IBC route. So that is the AMC which has been proposed, but what was announced yesterday seems to be no different from ARC, and I think this confusion needs to be sorted out.
You know, Maithili, I will very quickly come to you, and I please request each one of you to be a little brief here, because just a couple of questions to go. And Maithili, I think one of the things that Professor Rammohan also referred to is that we should not send everything by default to NCLT and IBC. Is there a tacit admission that perhaps the IBC couldn't take off the way it was envisaged? You know, we've seen, one or two big resolutions happen, but out of the 12 cases, not everything has been resolved. There is a significant asset value erosion on things like Alok Industries. Is there a tacit admission on that count as well?
Well, I think there is a realization certainly that the IBC is not the only route, and perhaps is not the best route in all cases. But having said that, the Sunil Mehta committee is a complete disappointment, in the sense that there is really nothing new. It's just a rose by any other name, except that it's not a rose. We're talking about stressed assets and problematic accounts. So I think it's more like, you know, it's not it's something that a bad name for, whether you call it ARC, whether you call it AMC, whether you call it bad bank, whether you call it para, which is what Arvind Subramaniam had suggested. It really makes no difference, and the report contains no details. It needs to be fleshed out. So what is the likelihood that this is going to deliver any more? Whom are we going to try to hoodwink? Is it just basically smoke and mirrors? So though you need an alternate mechanism, the entire issue of how is the ARC going to be funded, who is going to bear the haircut, what is the guarantee that banks will take decisions, consortium lending has actually been given a go by. So I think there are many grey areas, and until these grey areas are completely resolved, I don't think Sashakt is going to be any different from what we've seen in the past.
So I can't get over the name. It's always Sashakt and things like that. This is going to be strong, you know, it's always a sign of strong. But Mr. Kannan, coming to you, is it fair to say here that this entire thing that has been referred, or, you know, the minister was very categorical saying we will have no bad bank. But this, you know, the AIF or the AMC or the ARCs, whatever you may call it, like Maithili says, call a rose by any other name, it will still be a rose. And in this case, is this still a bad bank, you know, a small bad bank for individual banks really?
Let me tell you one thing. In the case of a bad bank, the entire amount is pulled by either by the government or by the bank themselves, and it's taken off. Here, we are expecting outside funds that will be totally cut off. Yes. See, if you actually look at the ARC structure, had the entire funding been done by 100%, would technically be called like a bad bank. The same structure is going to be there. It's not a bad bank. It is a restructuring process where 85 to 90% of the entire value will be brought in by way of funds. The funds could be by way of equity and or debt with a low coupon or zero coupon in the initial stages, with an upside depending on how it pans out on the basis of the projections. So I don't think that it's a bad bank. It is like someone investing into an asset at a particular value, hoping to turn it around on the basis of the expectation in the market and get a very high return.
Okay, just hold your thoughts there, Mr. Kannan, because I want to get you know, Professor Ram Mohan and Anand back into this discussion. And Professor Ram Mohan, let me begin with you. The RBI circular of February says that on the 1st of September, that's the deadline that's clicking, loans over 2,000 crore rupees that are unresolved will have to go to NCLT. How hopeful are you that this is not going to go to NCLT and in fact is going to be funneled into the AIF? I mean, are we working on a very, you know, shoestring kind of a deadline here?
Well, yes. So when you're proposing these alternative mechanisms, I think the key question. Yeah. So when you propose these alternative mechanisms. So sorry, again I lost the last part of your question. But I think the basic point is, when you propose these alternative mechanisms, are you going to get regulatory forbearance from the RBI in respect of the time schedule? I mean, all these mechanisms, I doubt that they can be, the resolution can happen within the 6-month time frame which the RBI has stipulated. So that, I think, is a very important question. And the second question is, if you're going to come up with a concept like the AMC, where you will move the assets into the AMC at net asset value, again, will the regulator accept that? And the third and most important question, I think, beyond the resolution of bank loans, is what exactly does the government intend to do with the public sector banks? We don't have clarity on what the government's intention, long-term intention for public sector banks is. I mean, they talk about giving more capital to the public sector banks, but the capital is not forthcoming. They say that they want to strengthen the public sector banks, but they want the market share of the public sector banks to decline. Right. So, there are serious, they say that they want consolidation in banking, but nothing has happened. There's no initiative. So, you see, so it's not, yeah.
Professor Ram Mohan, I'm sorry, I'll have to cut you short there, but I'll have to cut you short there, but I'll go to Anant, and Anant, a quick last word to you, and please make this brief. The fact that we are working on these deadlines, 1st September, any loan over 2,000 crore rupees will go to NCLT and not necessarily to AIF. They do not still have clarity from RBI. Is this then, is the assumption right that these provisions perhaps are more for the future stressed assets than the existing ones?
Look, Supriya, absolutely. Look, 3 concerns which remain unanswered. One is there's a whole backlog which is building up, and I completely agree with Professor Ram Mohan. There's a whole backlog building up in NCLT, which this process cannot handle. For steady state, NCLT, IBC, I think will work fine. But right now, you have 2,200 referrals which have happened to NCLT. Only 700 had been admitted. And you know that beyond 270 days, NCLT cases do have to possibly go into liquidation. So you need a one-time solution for this backlog, which was what the whole idea behind a bad bank or an ARC or an AMC, whatever you call it is. And yet the timelines for the formation of this AMC are being talked about as 3 months and 6 months. It's frankly just too low, too high. And we don't know where the funding is going to come from. The second part, the issue of recapitalization of banks is still not being addressed. We know there is a hole in banks. We know that the capital is not enough. We know the provisioning is not enough, and that's not been addressed. And the third part, reforms.
True.
You know, all this thing about the biggest problem with a bad bank is it becomes a clean slate, and then you go forward in life, and then you start the circus all over again. How do you ensure the cycle does not continue? And for that, reforms and the implementation of the PJ&I committee report, that remains completely silent. We don't know what's happening on that score.
Right. No, absolutely. Couldn't agree more with you. I think the ET Now view on this story and this entire reform, quote unquote, move really is that you've tried to do window dressing, you've tried to do put old wine in a new bottle, but the reality is that the root causes of what caused these NPAs are still far from being addressed. On that note, completely out of time. Thanks very much, all of you, for being with us. Maitri Busurumat, Mr. V.G. Kannan, Anant Narayan, and of course, Professor T.T. Rammohan. Thanks very much. We take a quick breather. Up next is India Tonight.